Hi, this is the market outlook for SPX for the third week of November. And as you can see, the SPX is very much stuck in a channel. And basically, I have announced that strong resistance level around 31.25 for a while, and we are about there. So, in essence, it's difficult to say much except that yes, we are in a channel, and the unknown now is what the market will do on this very strong resistance area. And you can of course say that, well, all resistance levels so far have been broken. Fair enough. That said, if we for example look at the former one, which was around 30.50, it did hold for 3 to 4 days, for about a week, and then broke. So there was a hesitation on a level that we call the stall level. The stall level now is on 30.86, or let's say 30.90, with, as its name implies, more questioning about future direction, and then the bulls are really going for their objective. So what's going to happen next? I don't know. We can check the economic calendar or other pieces of information on geopolitics to try and figure out when there could be a decision point. There's FOMC next week, Wednesday, so there could be something triggering a move out of the bullish congestion around midweek. Technically, profit taking is long overdue. That's store level is, unless we have a short excursion, and the store level is not exactly a new support. The new support is probably going to be around 30.50, and if we look at projecting fibs do give us a resilience level in this area. So this is a good cushion support area if there was to be a channel breakout. By midweek, probably the channel lower boundary will be around 3100, and that could maybe cause some selling acceleration. We are getting into what is usually the end of the rally. Will there be one? Last year was a completely different picture. So I would say that for now we don't have any good picture about what could happen north of 31.25. And in terms of support, I would say 30.50, and unless we have a major shock, then you see the fibs here, 30.20, 30.100, and 29.50 to 29.60. Incidentally, this is also the very strong support area. So we can actually draw another cushion here around 29.50 to 29.70. At this point, there's no reason either to look further south. We will first wait for important key levels around 3100, around 3050, and then lower. You can of course object that this is a 1 hour chart, it's short term, and yes indeed, I look at the 1 hour picture for my daily morning notes because I get more or less what the market will be looking like at least in the first hours of the day. If we want to maybe look at what the market could be doing over the next 3 days, a 4 hour chart is probably more suitable. As you can see, the channel is exactly the same, the levels are exactly the same. We now have maybe a better picture about this. I mentioned earlier support on the 30.40, 30.50, yes, and the next one may be 30.20, which would be incidentally the September highs. So it just confirms what we've just seen. I mean, sometimes you have a different picture, turning points, but now the market is trending in all time frames. So we just look for some confirmations here. And this is, I've drawn this fib extension pattern, which has shown the first resistance around 3060, well, let's say 3070. And maybe to correct what I said earlier, there is a projection price around 31.90, but I don't think the market will pass the 31.25 that easily. Going further up, we can even go and project all the way to almost like 3400, but we're not there yet. There will be portfolio recalibration, profit taking. SPX has done quite well for the year. We don't know what the interest rates policy. We were also in on the bond markets into a yield inversion, and now it's back into contango there as well. The environment is more fickle than at face value. Just for curiosity's sake, we can even look at the daily chart. Same picture all the way. And maybe what we can take from those three different time frames is that the 31.25 is the same across time frames, which actually reinforces its strength. We have a sell warning here. When it's in this color, it's generally just a warning, so it's more like profit taking for people going long. This was a buy signal, and this is actually a buy re-entry signal here. So this set of tools is actually doing pretty well. Right, so now if we look at the VIX, it's very much in contango. So it looks like the market is really aiming for a peaceful end of year. Retail sales have been lower, and there's of course the stats that come right after Black Friday, Black Monday. So by around end of month, we may have also some information. The market has discarded most economic news, retail sales, CPI, PPI edging up a bit. I think it's money driven by greed, it's liquidities in the market, Fed policy. This is, in my own opinion, the wrong paradigm. The Fed is a little bit too dovish in my view, but the market will always react if they think it's just nonsensical. So that's it for now. The next video will be on the Rhino positions. I'm going to record it now over the weekend and not wait for Monday morning's data, simply because there's very little to say. The trades are okay. We are handling this bull market in the best possible way, so really no sweat in that regard. Okay, have a great weekend, and as always, you can of course subscribe to this channel, share it, like, that would be very much appreciated. You can have a look at my soap playlist, because I'm posting videos at once or twice a week. I also have a Facebook page on Options Masters, and I will give you details below in the video description. Okay, thanks for watching, and bye for now.